What is up, everyone? My name is Adam with the Lavin Real Estate Group and Next Home Synergy. And I am here today to come up with a solution for those of you that are out there that have either been recently turned down on getting a new mortgage for the next purchase of your home, or if you're a first-time buyer and you've been doing some research and all the numbers that have been thrown out at you have basically made you think like, I'm never going to afford a home. And in both of those scenarios, what I want to tell you is that you've probably gotten the wrong information. You've either listened to or done research from gurus that are suggesting numbers that, create a barrier to entry into home ownership that really nobody could ever really surpass in the real world. Or those of you that have been out there that know that you can afford a house, but the bank is telling you no for some reason. So one of the best things about working with myself and my real estate group is that, our goal has always been to help people get to where they want to be. And we understand that everybody's scenario is unique. Sometimes it takes a little bit of creativity and a little bit more attention to get there. And along the way, I've met a lot of great people that have those same goals as me. One of those guys is Steve Rinaldi. He's the owner of the Rinaldi Group. He is one of the head mortgage people in the Delaware and Chester counties, and he also has serviced many loans in surrounding states, including Florida, Delaware. And he's just one of those guys that, he doesn't take no as an answer. He goes out there, he finds a unique way to get around some of the systems and red tape where he can and help you meet your goals as a home buyer. Now, he's never, going to go out there and put you into a bankruptcy situation in a home that you can't afford. But we both know that there are scenarios that pop up in people's lives, and that shouldn't stop you from owning a home. So right now, I'm here to talk to you about 5 scenarios that the two of us have kind of come in contact with over the last few years. And we've come up with some really great solutions and met some great vendors along the way that have helped clients of ours in the past and hopefully can help you in the future. So the first scenario is a lot of times it's with first-time home buyers. And what they do is they go out there, they kind of gather up all their information, and they get, some information and advice from people that have owned a home before, whether it's their parents, brothers and sisters, family, friends, or they've done research online. Listen to some of those financial gurus out there, and they've essentially come up with the concept of either my credit's not good enough or I don't have enough money for a down payment on the house. So that's probably not always true. Now, to be said, you need some money to purchase a home. Obviously, you do need to make a down payment on a home. But the concept that's out there of like, I need 20% to put down in perfect credit, that's not necessarily true. So for those of you that have done research and you're not going to qualify for, the conventional mortgage that's out there where you do have to, put a sizable chunk down for a down payment on the house as well as have a really great credit score, there is a loan called an FHA loan. Now, it doesn't stand for first-time home buyer. What it actually, FHA stands for is the Federal Housing Authority. And what this loan is it works very similar to any other mortgage, but it is backed by the Federal Housing Authority. And they essentially insure the loan for people that don't have as high a credit or as much money to put down on the house. Now, what this does is creates a great option for people getting into the home owning experience. And why that is because you can actually have a credit score as low as 500 points. That being said, if your credit score was that low, you're most likely are going to need a higher down payment. Or in the scenario where your credit's not horrible, but you just don't have a lot of money to put down, an FHA loan will actually let you put down as low as 3.5%. Now, you are still going to have closing costs that are involved. However, you can actually get a seller's assist or buyer's assist. Up to 6% on that loan is what is legally allowed currently. So we can, find the right house for you and sort of play around with numbers and really get you in a pretty reasonable amount down. And that way you can start building equity into your own home as opposed to just paying your landlord forever with automatic rent increases every single year. Now, there are some roadblocks to this loan, and it's not always as attractive in the current seller's market to sellers. The main reason is that there is actually an additional appraisal inspection that's involved that kind of identifies some safety issues that are in the house that need to be fixed and in great repair prior to purchasing the home. So what you're going to want to do is, if that is your scenario, is get with myself and Steve, and I can kind of go through with you, what to expect and what properties will be available to you. That being said, it's not impossible to do. I've been extremely successful over the last few years in doing so, and if that is you, I would love to work with you. Now, the next two scenarios are generally for the people that have gone to a bank and they've gotten turned down, and 99% of the time, it is because you own a business. So there's two scenarios here. The first one is probably the most common, and it's that you own a business. The business generates great revenue, but obviously, one of the advantages of owning a business are the tax advantages, and business owners don't always show as much income because their business is paying for a majority of their items. So the second loan that I'd like to bring to your attention, and that we've got great vendors that we can work with and get you approved and into a house in a pretty quick turnaround time, is what's called a bank statement loan. Now, this loan is for somebody that can show us that through your business you have a decent amount of cash flow coming through on a consistent basis. You just don't have the amount to show in income per se on your tax returns. So these lenders, they're private lenders that help us get creative and realize that there are business owners just like themselves that are out there that can't afford the house, obviously. And so we'll look at those numbers and let you know if you qualify. Now, it does require a slightly higher down payment. It is a 10% minimum. The beauty of the loan, though, is it does still allow for up to a 6% buyer's assist. Now, in a seller's market, those are a little bit harder to come by, especially a full assist. That being said, it's totally possible. I've done it multiple times. It's just all about finding the right property that works for you and creating a deal that works for both parties on the buying and selling side. Now, the next loan, similar to the business owner, that makes enough money and just doesn't have enough to show, is another scenario of, I just started a business last year prior to, I'd worked for the man essentially, and I didn't make that much money, and I said, you know what, I'm going to go out and do it on my own, and you had a great year. Now, if you go to any bank, they're going to want to see more income proof than just 1 year. They want to see multiple years of income proof, multiple paychecks, multiple tax returns, so on and so forth. And if they just see one big year, they're not going to roll with that. Now, you being this new business owner, that's your ground level and that you're going to go up from there. And we have lenders that believe in that as well. So we do have a scenario called a 1099 loan. It is pretty unique, and it does require a little bit more red tape to get through. However, it's a great entry point for you. In that, what we can do is take 1 year and look at your 1099 from your last year, and as long as you've prior to that and with the past year you've been doing your tax returns, and you're above board there, and your debt to income ratio is still great, and you can do a solid down payment of about 10%. We can get you into this loan based on what your income was for the last year and going forward, because as your business grows, your family grows, a lot of times we understand that you just don't have another year or two to sit around in a small house that's just not going to work for you and your growing business. So again, a little bit more unique, but there are other people out there that need that, and we can get you into the home that you need. The next and fourth loan has really come up a lot over the last year or two. And here's why. Um, People, making a great income, have a decent sized house, growing family, 2 or 3 kids. They have a nice house and it has worked for them for the past several years. Great yard, great school district, so on and so forth. Um, the thing that changed was that it was okay when everybody went to sleep there, woke up, had breakfast, and went to school and work, and then came back and were really only on top of each other on the weekends. And then COVID hit, and all of a sudden, not only the dogs and cats were home, but the kids were home from school. Mom and dad were home from school. In some scenarios, parents are getting older and parents are having to move in, or aging parents are having to move in as well. And now all of a sudden it went from, we can manage it on the weekends and we don't really need to pay for extra space to, hey, now not only are we driving each other crazy, being on top of each other 24/7, but also we need room to do our business, to do schoolwork, and for the dog to still play. So generally, particularly in Delaware and Chester County, that involves moving up into a higher price bracket, right? And a lot of times what happens is that because your family has been growing and you've been buying cars and investing in your business, and mom and dad are getting older, and normal life, you have money, you've got money going into the retirement account, you just don't have an overabundance of money to put towards the down payment of another home, particularly a larger home. So we actually are working with some great lenders on what are called jumbo mortgages. Now, it might sound scary a little bit, but they do exist out there. And so what they are is for larger houses, or higher priced houses, where you would have to mortgage either at or more than $647,200 is what the exact floor is right now. That may shift a little bit depending on when when you actually get into the game. But what it does is it lets us get a little bit creative with purchasing your next home. So if you need to move into that bigger house, you have the income flow to handle that type of payment. And now it's time where it's like, to have that space, we're willing to pay that money on your monthly mortgage payment and taxes in order to have more of a spacious feel with everybody being at home now. We can actually get you into a higher priced home with as low as a 5% down payment. So versus the 20% that you would need on a house of that size, we can get you in for a little bit less. Now, obviously, your mortgage payments are going to go up the bigger house that you go into, and your, the lower the down payment, again, mortgage payments are going to be a little bit higher. So everybody's scenario is unique, and we'll definitely, take that into account as to what your goals are in terms of your living scenario, but also, what you want your monthly payments to look like. But the option is out there, so it's not like, hey, you're just locked into this tiny house forever because the world has changed around you. We can help you change with the world. And then the last loan that I throw out there kind of goes back to first-time home buyers again, but also kind of goes out there to anybody, and it is something called a USDA loan, which most people don't understand what that is. So the USDA is the United States Department of Agriculture. In every single state and in most counties, there is land that is sectioned off essentially on the map, and it is called USDA land. And what it is land that's generally a little bit further out from what the center of town or the main cities would be, more rural land, generally surrounded by a little bit more farm area. And again, it's another federally insured loan, or federally backed loan, that is essentially promoting people moving out into these rural areas so that the land is still being used and not just going to waste, and also producing taxes and things like that in those areas, so it's not just farms sitting out there trying to keep the entire economy out there alive. Now, the great thing about it is that it is a 0% down loan. Now, you would still be, responsible for closing costs, but again, we can look into getting a seller's or buyer's assist in this scenario. So you can actually get in owing very little into a house. Now, sometimes this isn't the greatest option for everybody because you are kind of locked into certain areas. A lot of times the school districts aren't as reputable as some of the more popular zip codes or school districts to move into. But if you're not super tied into where you want to live, or if maybe you enjoy living a little bit out of the way, you don't mind it, or you want more land in general, it's a great option for you. So you can get more land, you can get away from everybody, or you can get your first time home knocked out at a 0% down payment. All you owe is the closing costs. Build some equity, and then as you grow and maybe your family grows and you need to worry about moving back into that school district life, at that point you've built up equity in a house as opposed to just renting, and you can sell that house and then kind of move up from there. So all great options, all kind of unique versus just going to the bank or going online to some of those big national brokers that we all see on the Super Bowl ads, and really finding a situation that works best for you and or your family into either getting yourself into your first home or a home that makes sense for you based off your business's revenue. So if any of these apply to you or you have any questions on them, I'd love to get a chance to work with you, talk to you, and give you my perspective on what your situation is. Also, if you want to jump over me and you just have a mortgage question, feel free to reach out to Steve. I will put his information below, but you can contact me, call me, text me anytime. My number is 610-442-9371. Feel free to email me as well. Thank you so much, and I hope you have a great day.